First, the US dollar surged to a fresh 38-year high against the Japanese yen as Treasury yields rose sharply. Well, the yen sank to 161.72 per dollar on Monday, extending a downward slide driven mainly by a wide gap in interest rates between the US and Japan. Well, the yen's weakness was further dragged by data showing Japan's economy shrank more than initially reported in the first quarter. The benchmark 10-year Treasury yield rose nearly 14 basis points to 4.479% overnight as investors weighed the possibility of another Donald Trump presidency, raising tariffs and government borrowing. Meanwhile, the euro climbed on Monday following the historic win by the French far right in the first round of the parliamentary election. Well, for more on this, let's bring in Hani Abuagla, Senior Market Analyst at XTB MENA. He joins us now from Dubai. So tell us more about what's boosting the dollar.
Thank you, Miranda. Can you hear me?
Yeah, can you hear us okay? Let's try that one again.
Yes.
Just tell us more about what's boosting the dollar.
Okay, I think the real rates, there is nothing else other than the real rates, and also the real data coming from the US, all the good data. I think last week we had the PCE and also durable goods and retail sales. All of them came in a good territory for the US. So in general, the US economy is doing so good compared to the Japan, which is very weakening that economy. Currently, I think the dollar since December last year is climbing up from the 100 level all the way to 100, almost near to 106 on the dollar index. I think there is a lot of things driving the dollar to be up. The real rate, if you compare the real rate compared to others, you will find the US is making 2.6% compare at least to the Japan, giving negative 2.4%. So I think the real rates and the carried rate is really pushing the demand for the dollar.
Now, the gap between Japanese and US interest rates has hammered the yen this year. How soon do you think could the Bank of Japan raise rates?
I think raising the rates it's not anytime soon, especially after yesterday read, because they revised the growth for the first quarter. Even they revised it to negative 2.9. So I think this is for sure will push the central bank to delay the raising the interest rate. I think before even this read, they had no choice other than raising the interest rate. They raised it from the negative territory to the zero territory, but they need to push it up more than the zero to go back again to the negative side. Keeping the interest rate very low for a very long time, that I think will not help the USD GBY, at least against the dollar. For sure, this is going to make the yen more weakened than we think.